Hey guys, hopefully everyone is doing well. Today's target is to see a new concept we are starting, and that's absorption or marginal costing. Basically, we will be focusing upon costing. This is very important for any manufacturing concern. Just consider it as a backbone mandatory for every organization. Under management accounting, we are related with basically three factors, and all factors are related with cost accounting. So material we will be looking, and then we need to understand what is labor cost, and then factory overheads are related to us. As in previous chapters, we have seen these three factors in complete way. But right now we are related with costing of these factors. Let's say if to understand various factors, various elements, and various types of FH related to cost, or various types of costing related to material and labor, we will take some examples, and with the help of those examples we will try to understand. Material cost means when you are related with purchasing of material, storing of material, issuing of material, and balancing of the material. Let's say you have started your business, and at starting of any year, any period, any month, any week, if you have some raw material in your hand, that is called opening material. And during the year, if you have bought some raw material, that would be called purchase of material. And at the end, what happened, you were having opening material, and then you have purchased. This would be called your total material present. At the end of the day, if you have some material in your hand, that would be considered as your closing material, and you will write it as closing material. Since we are related with costing and we want to know how much total cost of material was, opening material, then you have added your purchases. This will show how much total material was present at the time of production. So what you can write it, total material available. Again, understand, if you were having, for example, 100 of material at start of the period, you have bought 300 more units of material. Total 400 material was showing that this was material available for the production. But then what happened? You had some raw material still in hand. That means this raw material was not used in your production process. Say that raw material was of 50 rupees. So what this 350 will show? Now again understand. This was the material which was available for you, and you have started using this material, but after end of that particular period, 50 units or 50 rupees material was still in hand. It means remaining material was used. So what you will name it? Material cost, or it may be called material used. So this way you will be well familiar with the costing procedure, and first costing was related to your material. And then labor is simple thing, we do not need to explain it elaborately. The simple thing is you will pay your wages to your labor according to the contract which you have made with it. So labor cost you can pay in terms of your contract. It may be possible you are paying wages according to units manufactured What does that mean? Let's say a person is manufacturing 500 units and you have made a contract with the person that each unit he will make, you will be paying a particular lump sum amount. So that would be per unit cost. So 500 units he had made, and you have made a contract with him that for every unit 10 rupees would be given. That lump sum amount I'm just telling you right now. So what will happen? 500 units the labor have made. For every unit 10 rupees are settled to be paid out. So it means total or lump sum amount which would be paid is 5,000. So this is according to number of units manufactured. It may be possible you are paying wages according to hours worked. So in this way, you will not be related to units manufactured. Here what we have said, we were related with wages according to level of production. But here we are not related with level of production, we are related with working hours. So how many works the labor had worked, and per hour wage rate would be used. Suppose the person had worked for 16 hours, and for every hour you have decided to pay 100 rupees. So the total amount which would be paid would be total amount which would be paid is 1600. So in this way you have paid your wage. There might be several other things, but right now we are not related with, it's not our main topic. We are just trying to understand costing. So we have material costing over here, and we have labor costing over here, and now we will try to understand what is factory overhead costing. Factory overhead, as you know, is again costing and expense. Factory overheads. First thing to understand is these are indirect expenses. Expenses which are indirect means not related to production. Indirect expenses of factory, or you can say not directly related to production. So these are indirect expenses but not related to production. I'm just giving you a very direct example. Let's say you have an organization, manufacturing concern, and you have canteen over there. Obviously, without canteen, it would be very hard to run a factory. Without having food available inside the factory, there would be a complete disparity among labor units, and they will not be ready for a proper and wholeheartedly production. So you are maintaining a canteen, but canteen has none of the concern with the production. So it is indirectly associated with the manufacturing concern. Examples we can have is, first example was canteen expenses or meals expenses. Here you will see that we can take example of a textile mill expenses. These examples are for for garments factory, let's say. Canteen expenses, that let's say a medical store or clinic is there. So obviously you will be spending some amount upon medicines or salary of the doctor, salary of the compounder. So those amounts are also expenses, but they will be considered as factory overhead. Why? Because these expenses have no concern with the garments manufacturing, canteen expenses, medical store. Similarly, you have your supervisor, which is supervisor, okay, which has no concern with the production. He will never be making, never be running a machine, just supervising. So indirectly, he will also be part of production, but indirect. Medical store, indirect, canteen, indirect, supervisor, indirect, and then you will see electric power. Again, indirect, fuel. In in garment factory, what is direct? How much raw cloth you have purchased, buttons, threads, these are direct sort of expenses. And the carriage or freight you have paid to purchase the raw material, those are direct. And here we are giving examples of indirect expenses of the factory. So electric power, fuel, and let's say coal, tar you have used. So these are expenses of indirect relationship of factory. All these expenses would be considered as factory overhead. When you are saying costing, it means there are three major things which will be associated in this chapter: material, labor, and FH. Material, labor, and FH. We have seen how material cost can be calculated. We have seen how labor cost can be calculated, and we have seen how factory overhead cost can be calculated. Let's say canteen expenses are 50, medical store 5, supervisor 10, electric power 5, coal tar is 20. Collectively, when you will sum up all the expenses present over here, so this will be your total factory overhead expense. But we are trying to understand costing. Under costing, we have material cost, labor cost, and factory overhead cost. But we would like to explain little more factory overhead cost. For that, you will have to understand few things. Let's say you want to purchase uh, any book or any stationery, or from here you just let it understand you want to purchase fuel. Since we are taking examples of factory overhead, you want to purchase fuel. Before purchasing fuel, you will plan how many liters you want to purchase, how much could be the cost. You will take quotations from different sources, you will Google it, you will go to the wholesalers of fuel providers, and there you will take the prices. So your plan to purchase has been started, and you will have an expected cost, and that would be expected factory overhead or expected FH. Since right now you haven't purchased that fuel, it is still you are getting information from different sources. You have asked wholesalers of fuel providers to provide their quotations from that source, or from Google, or from different online providers or sources. You have collected the information and you have sketched how much cost could be. It's not the actual cost, it's expected cost. So you will name it as expected FH. Expected FH can also be called assumed FH, or it may be called normal FH. For example, when you have taken every information, you have understood the cost of that fuel is 100 rupees per liter, for example. So this is your first FH, and that would be called your expected FH. After that, what you will do, you will start your preparation. to purchase that fuel, for which you will arrange your amount. Kindly focus upon the word which I am saying, arranged amount. This is called arranged amount. And finally, when you will arrange this amount, this would be called your budget FH, or it is called spending FH. Let's say you have arranged an amount. How you will arrange? You have said expected expenditure is 100, and when you will go to buy that particular fuel or anything, you must have some additional amount in your pocket. Suppose you have arranged 120 rupees for buying that fuel. It is called budget FH, expected FH, budget FH, and then finally what you will do, you will spend that amount. There may be possible that amount which you are actually spending is more than your budget or more than your expected amount of FH, or it may be possible it is equal to your budget. It may be possible it can be less than that of a budget, but what amount you are actually spending would be called actual FH. All right, hopefully you feel you have understood. By this, there are next more important topics, which is fixed factory overhead. A fixed FOH means whether you are spending that amount, the amount would remain fixed. It means if you are purchasing raw material for 100, or you are purchasing raw material for 200, for 300, for 400, this cost fixed FOH will be seen. If you are paying your labor 5,000 or 1,600 or 10,000 or 3,200 or 10,000, but this cost would remain same. It means a cost or an expense. These are examples of factory overhead. And if you are paying fixed charge or fuel, fixed charge for supervisor, fixed charge for canteen, fixed charge for medical store, it would be called fixed FOH. Indirect expense which is fixed. How would you explain it? Fixed FOH, the cost which will never be changed. It would remain fixed. The first example which we can give is rent of factory building. Now you can see it is FOH. Why? Because it's rent of factory. But since rent is fixed, no matter if you are manufacturing 400 number of unit or 800, you will have to pay a fixed amount of rent. No matter if you are paying to your labor 5,000, 10,000, 15,000, you will have to pay rent as fixed. This would be called your fixed FOH. And then we are associated with variable FOH. The amount of indirect expenses which are not fixed. This is very simple example. You can see that fuel charges. If you will manufacture 50 unit, there will be some fuel charges, for example 5. But when you will increase your level of production, fuel charges or fuel expense will also be increasing. So by increase in level of production, if your FOH is increasing, or by decreasing your level of production if FOH is decreasing, that would be called your variable FOH. And you can give example as fuel charges. So in this way we have 5 types of FOH, and you are needed to read them again and again, revise them again and again, and you must have their complete structure in your mind. Especially this fixed FOH and variable FOH, these would be very important. And here expected, budget and actual are also very important, because in this chapter we will be associated with directly or indirectly with these 5 concepts. Okay, now we are coming over here. We can divide this into 2 parts. Here we will see, since there are 2 types of costing we are concerned with, one is marginal costing and second is absorption costing. Here we will understand how we can calculate marginal costing. First, and then we will see absorption costing. Okay, under this we will be related with contribution margin format income statement, and you are well familiar with it. We have already discussed it for so many times. Cost, volume, profit analysis chapter we have discussed, but if you are listening for the very first time, there would not be any problem. We will be starting this from the scratch. The first thing which is associated with marginal costing is your sales. Amount of sale would be written over here. Then you will subtract your variable cost, with which you will get contribution margin, and then you will subtract your fixed cost, you will get your net margin. So whole of this would be called your marginal costing. What word we are not familiar with? Look, sale is a simple thing. It would be given in the question. How much amount of goods you have sold out would be written over here. So finally, we will be having amount of sale, which would be written over here. And then we have variable cost. It would be calculated and would be written over here, and by subtracting variable cost from sales we will get contribution margin. Contribution margin is nothing, it is just a calculation. How would you calculate it? When you will subtract your variable cost from sales, you will get contribution margin. So it means it is just statement. Now, specifically when you are related with this chapter, performa of marginal costing would be little different. You will pick it up and will create a distance. And what we will do over here, since you have seen that we have discussed variable FH and we have discussed fixed FH as well. So you must have complete idea what is fixed FH and what is variable FH. Alright, and now here what you will do, you will see how much opening stock is present in your question, and we have discussed it over here. Opening stock of material, that means raw material which was present at starting of the period. If you have two dates, January and December, so raw material which is present on January, that would be considered your raw material. And what you will do, you will add purchases over here, and then you will subtract your closing stock. In this way you will get your total cost, and total cost would be mentioned over here. And where you will write your opening stock, this would be your opening stock. Here you will write your purchases and you will subtract your closing stock and will write over here, and finally the amount of cost would be written here. But the important thing is you must have in your mind you are calculating only variable cost. This is so important because if you will not consider it, you will not be able to solve correctly. And variable concept we have understood at here. If you want to hear it again, rewind your lecture and look it up again, what is variable FH and what is fixed FH. So in this way your total cost will arrive over here. You can name it total cost, and this would be written over here. So finally what you will do, total cost you have calculated, sale would be given in the question, or it might be possible you will be calculating sale by yourself, and this total variable cost would be picked and be subtracted from sales, with which you will get your contribution margin, and this would be written over here. And finally fixed cost you have discussed over here, fixed FH which would never be changed, and you sometimes in question the word fixed will not be used, and you will have to see according to concept. As I have given you example of rent of factory building, another example we can take from here. is salary of supervisor. This would also be fixed. So there are two examples we have discussed: rent of factory building, salary of supervisor, and there are several other examples. But you have to make your concept, you have to make your mind, if amount is fixed, whether production is at lower level or production is at peak, whether you are working for one day in a month or you are working for whole month, you have to pay a fixed amount. When it is fixed, it would be called fixed FH. Example I have given to you. So sometime in question fixed cost would not be present by the name, and you will pick the expense from expenses, and collectively those expenses would be considered as fixed cost, and you will write your fixed cost over here, after which you will be able to calculate your net margin. How? This fixed cost would be subtracted from contribution margin. When you will subtract fixed cost from contribution margin, you will get your final net margin, and you will write amount over here. So in this way, you will complete your costing procedure under marginal costing systems. This is different to absorption costing system. So in this way, please take a screenshot over here, and you are needed to make your mind. This statement should be in your mind, because in whole chapter what we will be doing here, we will calculate absorption costing, and at this stage, at this side, we will be calculating our marginal costing. As we have understood this procedure, we have completed it. Now we will see what we can do in absorption costing. This is our second procedure. Here we will see, instead of marginal, now we will see absorption costing. For this, you will have to remind yourself what we were doing in cost of goods sold statement. Simple income statement when we were making, we had sales very first thing, which was part of our income statement. Then we used to subtract our cost of goods sold. The final answer was called gross profit, and then we were needed to subtract all selling and administrative expenses, with which we were getting net profit. This was our income statement in previous chapter where we have discussed the cost of goods sold statement. Let's say if you are listening for the first time, there would not be any problem. You just have to keep these things in your mind. How much total sale was, how much total cost. When you will subtract your cost from sales, you will get your gross profit, and you will subtract selling and administrative expenses, you will get net profit. What are these selling and admin expenses? As you have seen that we were running a garments factory. First thing first is you just keep it in mind. Selling and administrative expenses are not material cost, not labor cost, not factory overhead cost. This is something different. If your cost is indirect but not in the factory, that would be considered your selling and admin expenses. Here we can understand it separately. Selling, admin, marketing expenses. These are actually called non-operating or other expenses. Non-operating or other expenses, this is your selling, admin, marketing expenses. Again, by definition, they will be called indirect expenses, but not related to factory. And what was FH? As you have seen, indirect expenses but inside the factory. Here, indirect expenses not inside the factory, not related to factory. How you will deal it? Like you have paid salaries of office staff. Then you have made advertisement. Then you have paid taxes for insurance. Then you have paid stationery expenses. Okay, when you will see that we have selling, admin and marketing expenses, these are their examples. Please make your mind. All these expenses will not be happening inside the factory. So these are indirect expenses but not related to factory. Salaries to office staff. Office staff means let's say your factory is present at Multan Road, at GT Road, for example, at Shekhupura Road. So factories are normally not present inside the city area. So factory is present at Multan Road or GT Road, where you will be making these sort of expenses inside the factory. And office is present in city. Let's say office is present in Lahore, in city area. So what will happen? You will be paying these expenses at office. These expenses have no concern with the factory. Advertisement, no concern with the factory. Taxes outside the factory. Insurance outside the factory. Stationery has no concern with garments. So you will be spending these amount at office, not inside the factory. So these are selling and administrative expenses. So what you will do, you will subtract these selling and administrative expenses. Cost of goods sold, for that, what we will do, those who had seen these things for the first time, you have calculated already cost of goods sold. For that, you need opening stock and then you will add purchases. Then you will subtract your closing stock, will subtract closing stock, and after that, you will get your total cost of goods sold. Same what you have done over here. This was your total cost, and in the similar way, when you will subtract your closing stock, you will get your CGS or total cost. Here you will call it CGS. All right. So please understand, right now there is no difference between this opening stock plus purchases less closing stock, but here what is written? Variable cost. And here cost of goods sold. It means either it is variable cost or fixed cost. Everything would be written over here, variable cost or fixed cost. Both costs are called CGS, so you will not distinguish it. Please make the difference. Sale is present over here at absorption costing and sale is present over here at marginal costing. Less cost, but here there is only variable cost. And here cost of goods sold, that means it is variable or fixed cost. Every cost would be written over here. Right at this point, you will write your sales and then you will calculate your cost of goods sold. Opening stock would be written over here. We will add purchases and we will subtract closing stock. Final cost of goods sold would be written over here, and by subtracting this cost of goods sold we can get our gross profit. But over here we are introducing a new concept and you will have to be mentally prepared. Come over here. We have discussed various type of FH: expected FH, budgeted FH, actual FH, fixed FH and variable FH. A new word I am going to introduce is variance. So you will understand the word variance. Variance is taken from variations. When something has dispersed, when some factors or elements are variated. So the word which we will use would be variance. For example, you were 10 years, uh, your age was 10 years. After 1 year, your age would be 11 years. So what had happened? You are variated. 2 years ago, let's say you were in college, and right now you are in your university education. So something has been variated. 5 years ago, your height was 5 foot, and now your height is 5 foot 4 inches. So your height has been variated. So when something changes its position, it is called variance. In first semester, let's say your CGPA was 3.5 and now your CGPA is 3.8. It means something variated. So variance is associated when there is difference between two factors. Initially, suppose somebody is saying you are becoming intelligent, you are now intelligent. How somebody would say that you are now intelligent? There must be some previous calculations present, previous observation must be present. So the comparison of two different periods will suggest that something has variated. How? At starting of the period, you were having a CGPA of 3.5, but now you have CGPA of 3.8. So conclusion has been made, you are becoming intelligent. How? With comparison of two different elements. At starting of the period CGPA, at the end of period CGPA, and difference would suggest that what change comes in. In the similar way, or let's say take another example. If we are making comparison of students of accounting and finance and students of business administration, both students are not equal. So there is a difference between AF students and BBA students. The difference would be called variance. So whenever you want to calculate a variance or difference between two types of element, that would be called variance. It is also called the difference. But keep it in mind, when you are calculating difference of two elements, that would be called variance. And if difference is in between two types of FOH, that would be called FOH variance. Okay, we have seen several types of FOH: expected FOH, budgeted FOH, actual FOH, fixed FOH, variable FOH. And when you will see the difference between these two or any two, the difference would be called FOH variance. For example, this expected FOH, it is also called applied FOH. You may name it applied FH, expected FH, assumed FH. If you will be making comparison of this applied FH and actual FH, that would be called FH variance. Let's say you wanted to buy fuel, as our example, you wanted to buy fuel and you have make uh, your planning, you have make your research how much total cost could be, not actual, could be. So you have taken suggestions from suppliers, wholesalers, online sources you have used, and you have assumed or you have supposed, or the name we have given is applied. This is specific name which will be used for this type of FH. So this is also called normal FH. Suppose amount of that FH is 1000 rupees. So you have made plan to purchase the fuel, you have taken information, and according to that information you have supposed that 1000 would be the expense. It is not actual expense, you have just supposed, and then you actually purchased. When you have actually purchased, the expense which you will made would be called actual FH. It might be equal to 1000, it might be more than 1000, it might be less than 1000. So supposed amount would remain same. So these are three possibilities. Now here please understand, when you have supposed that amount of expense would be 1000 and actually amount you have spent is 1000. So would there be any difference? You will call no, there is no difference. So there will be a zero. Difference we will be calculating over here, and that difference is called FH variance, and this variance is difference between two FH, two types of FH. Here we have our applied FH, and upon here we have actual FH, and the difference between these two type of FH is called variance. In first case there is no variance because applied FH and actual FH is equal, no variance. Okay, come over here. When there is applied FH 1000 and actual FH is 2000, there is a variance. How much variance? That is 1000. In that case we will decide what kind of variance it is. And here applied FH was 1000 and actual FH is 800. Again there is a variance of 200, but in this case variance would be considered in different way. How? Applied was less. Please note it down. Applied was less. So you will make a rule over here. If applied FH is less than actual FH, you will call it under applied FH. In second case, if applied FH is more than actual FH, you will call it over applied FH. Okay, this is again you will have to consider under applied or over applied. Now see over here, we can make little space so that we can write it. Here you will write second example, and you can take it over here. Now let me know if you have calculated difference between two type of FH, that would be called variance, but in a different way. Here applied FH was less, actual FH was more, and what we have decided, if applied is less than actual, so you will call it under applied FH. And keep it in mind, under applied means your estimation has gone wrong and you thought or supposed or assumed less, so ultimately what you will do, you will add over here. Just keep it in mind, the sign which will be used for under applied is add. Why? Since you have assumed less, actually you have paid more. So what you will have to do, you will have to add it to make it actual. Now come over here and see, applied FH was 1000 and actual FH was 800. It means actually you are spending less. You have assumed more. Assumed more means there was a wrong perception, wrong assumptions. You have supposed a wrong amount. So you need to subtract this wrongful deed, and what you will call it, if applied FH is more, you will consider it as over applied FH. Now you will remember two things. If applied is more, you will call it over applied, sign will be used minus. If applied is less, you will call it under applied and sign would be plus. Under applied means you have supposed less and actually you are spending more. To make it actual, you will have to add. Okay, and in this case over applied means you have supposed more than that of actual. So to make assumed FH equal to FH, you will have to subtract. So minus sign would be used for over applied, plus sign would be used for under applied. Come over here, to absorption costing, here there would be a need. You will either adding or you will subtract what? If it is under applied FOH, you will add, and if it is over applied, you will subtract, and finally the answer would be adjusted over here. This way you will be calculating your total cost. Gross profit will be calculated over here. How? Sales and CGS both will be subtracted. You will subtract your cost of goods sold from sales. Okay, instead of writing here, you can write sales over here. And what you will do, you will write your cost of goods sold over here, and then you will add or less your under applied FOH. Finally, you will write your cost of goods sold, final cost of goods sold over here, and then difference of cost of goods sold and sales would be written over here. This would be your gross profit. We are highlighting it, and then selling and administrative expenses would be given. You will write over here, and finally you will be able to calculate your net profit. How? You will subtract your selling and administrative expenses from gross profit, and you will get your net profit. We are highlighting it. Okay, this way statements for marginal costing and absorption costing is completed. Right now, please make your mind. The total numerical, full-fledged numerical is starting from here and ending over here. Just 3-4 lines you are going to write. 3-4 lines are you are needed to write over here in marginal costing. So in management accounting, you are not supposed to do clerical work. No numerical would be having with longer lengths, smaller numericals, but with concepts. Each and every line has concept. As you have seen, cost of goods sold, variable cost and fixed cost have a concept. Then you have under applied, over applied, the concept, selling and administrative expenses, the concept. And I'm very hopeful each and every concept we have discussed over here. Costs were discussed, different types of FY discussed, selling and administrative expenses were discussed, and importantly, under applied, over applied FH difference was discussed. I'm requesting you to please make your mind. Very first thing to focus is your FH, and you are requested to see these 5 types of FH and make your own mind. Use your own tools. How you will remember these things: applied, budget, actual FH, fixed FH, variable FH. Please, I'm requesting you to make your mind for this particular FH, and then you come over here. At last stage, we have distinguished under applied and over applied FH. Read it again, make your mind, and practice again and again. Then third concept was selling and administrative expenses. We have discussed over here. You can see everything is discussed. Everything would be contributing in making your income statement of margin costing and absorption costing. Right now, what you will do, this is your first target to understand statements. When you will make your profit, when you will make your profit, there may be 2 types of ways, and under which you will be calculating your net profit. In both cases, the purpose would be similar, and you will be making your gross profit, or you will be making your net margin. What I was doing is to put line over here, and line is not being put. Let me see how to put the line over here. This is actually what I was wanted. Okay, now see over here, you have calculated net margin. Actually it is net profit. You have calculated net profit over here as well. But the difference is, when you are not suggesting under over applied, it would be called margin costing, and you can see the difference. Here you have written both variable cost and fixed cost over here. And come over here, variable cost was written above and fixed cost was written downside. These are the differences. Just requesting you to please read these performas and these formats and make your mind and do not mix each other. We have segregated these two parts separately, and you are requested to please make different places in your brain as well. So our introductory lecture has been ended. This was about absorption costing and marginal costing, where we have discussed material, labor, FH, different types of FH, then selling admin expenses, then absorption margin costing. Look, this is your question. Whatever you will be doing would be in this shape. And then you have understood what is phenomena of underapplied or overapplied FH. So finally, time for introduction has been ended. If you have any difficulty or if you have any concern about understanding of any word present over here, you are very open to text, message, or directly ask me about the concept. But request is again same, please practice and do it again and again. Revise it again and again. Surely we will be meeting again for solution of practical problems related to absorption and margin costing in future, inshallah. Up till then, please take care of yourself. I'm requesting you to please pray for me as well. It's time to say goodbye. Thank you very much for your time. Allah Hafiz.